You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mike Yahoo.
Hey, what's up, Market Moose? Mike from the Moose on the Loose. Happy Tuesday. Just quick note. Yesterday, I did record a podcast, but I published it on my other show, the Dividend Guy podcast. So we talked about TFI International, CCL Industries, and Waste Connection earnings. The title was TFI, CCL, Waste Connection, the great, the good, and the ugly earnings review. So you can imagine that TFI International was the ugly earnings review. So sorry about the mixed up. I did not want to mix stuff even more, so I decided to let it on the Dividend Guy podcast. So you can listen to it on there. If you listen to the podcast on YouTube, you did not see that because it was also republished there. So under the Moose and the Loose. So anyways, long story short, I messed up. I'm sorry, but there was an episode. So if you missed it, well, you can go on to the other show and you will find it there. I'm following up today, though, about what should you do if you hold a company that is not performing these days? And I mean, we could take TFI International as an example. I think it's a good one. The stock lost about 20% on earnings day, but then on Friday and even on Monday, it kept on going down, raising a lot of panic amongst a lot of investors. Full disclaimer, I do not have it in my portfolio, so I'm following these stocks with great interest. But I have like no skin in the game in this one. So maybe it's a good idea to like use it as an example of like, when is the right time to let go of one of your less performing stock with conviction? So with a clear state of mind where you can have like an easy framework to work with. So you can either keep or sell, but then you can move quickly. When a stock like this drops, like now it's about like 30% down. That hurts. That hurts a lot. It creates a lot of panic. And then you're starting to wonder, okay, so what is my next move? So the very first thing that you must do is to understand what's going on. Of course, there's always a lot of like big reaction like this. It's not purely rational, but here's the thing. Most analysts right now, they are reviewing numbers at TFI International. The CEO was quite clear about the challenges that are going to continue in 2025. So now all the numbers and all the valuation have been reviewed, mostly with less than truckload margin. So here's the thing. Like one of like the biggest playbook at TFI International is they have like a super wide network of distribution. They have tons of different clients. So what they do is that they offer less than truckload transportation for a lot of clients that do not need a full truck to be filled, right? To be sent away on the road. So what happens with those is those clients have to pay a higher price to benefit from transportation instead of like taking the entire truck. When you have a lot of clients and multiple roads, you are able to combine a lot of less than truckload shipments, putting that into one truckload and kind of like making it a full truckload. So you optimize your transportation, you optimize your trucks, and of course that helps margin. Now, TFI International losing some clients, the economy is difficult, so that is the information that we get. So long story short, get less, like smaller margin on the less than truckload. This thing is going to continue moving forward for the rest of the year. And then we don't know what's going to happen next, right? So that is always a problem when you're trying to project yourself into the future, especially when you look at that. So now that you know What is the problem? The number one thing to do is to determine if that company has the resources, the expertise, do they have a plan to get out of this mess and get something better? Now, I'll leave it up to you, especially if you have TFI International in your portfolio. You probably know the company more than me, but that's the point. The point is to look at the expertise, to look at the company. I already know that TFI International is quite cyclical. It's not the first time, and it's not going to be the last time that they run into a speed bump like this. If you look at the stock price, it is quite volatile as well. Of course, a drop of 30% is a lot bigger than usual, but now it's bringing the forward PE ratio around like 14, 15 times the earnings. Maybe it's a good opportunity as well. You have to balance it out. But how can you do that? Because of course there are a lot of guesses here and a lot of uncertainties. So here's what I want to suggest that you can do. Once you have determined okay, what needs to be done, what's that pop-up company like history and so on, establish a time frame. I love to be patient. I am a patient investor, and patience has paid me over and over in my experience. However, there's a big difference between being patient and being complacent, right? So just telling yourself, "Oh, everything's gonna be fine," probably not enough. So you need a time frame. You need a time frame to determine how long you give to management to turn things around. So in a case of a company that you really like, that has been doing well and has a strong dividend triangle, you can easily give a 2 to 3 years time frame. I know it could be seen to be very long, but again, in your life, you're going to be an investor for likely 50, 60, maybe 70 years. What's 2 to 3 years out of even 50 years? I mean, seriously, it's nothing, right? That is short term. So giving 2 to 3 years to a company to get their things together and get back on track and show a strong dividend triangle again. So that would be the time frame. Now, it's not just putting that stock in a closet and then opening that closet in 3 years after the time frame is over. During that time frame, this is where you will monitor the stock quarterly. That is super important for all stocks at all time. But now you have a company that will require a little bit more time than others. For example, everything is rolling for National Bank. They're gonna report their earnings tomorrow, actually, on Wednesday. And on Wednesday morning, I'm going to do a special episode on Scotia, BMO, and National Bank because the Scotiabank and BMO report on Tuesday, National Bank on Wednesday, so I might be a bit later on this one. But this one is doing well for a while. Of course, I'm not going to spend that much time in my portfolio reviewing National Bank's earnings. However, if TFI International would be there, well, then I would take more attention to what the CEO has to say next quarter. How's the margin on the less than truckload? Because we already identified that was the problem. So following on the revenue and the margin, because last quarter revenue were up almost 6%, but the EPS, the earnings per share, was down about 30% or something like that. So that shows a big problem with the margin. So now every quarter, I will be interested in knowing what management is doing to improve this and how numbers are reacting to that plan. And this is how I will be in a better position to determine if I should keep on holding a company like TFI International or not. So if the margins are getting a little bit better and better over a few quarters, of course, next quarter, I don't expect much. It's probably going to be bad, but now you're looking a little bit more about the sequence. So one quarter to another instead of Q2 of last year versus Q2 of this year. Big difference here because, of course, it's going to be worse numbers in 2025. So don't expect any improvement now, but if you can see that there's a glimpse of light at the end of the tunnel because things are getting a little bit better than last quarter, then it's a good sign. Probably that you're going to have like a couple of rough quarters, but by the end of 25, now you should have a clear plan from management. You can have like clear action, and now you'll see if it's just the companies is the problem or the overall industry. Because if we enter into a recession at the end of 25, well, don't expect transportation like trucking, railroads, and so on to be thriving. They're not. So now you have a time frame. Now you know that you have to monitor quarterly for a plan, for improvement, and most importantly, you need financial metrics. You need the numbers telling you a story. Yes, the CEO is going to tell you a story. You're going to read stories on BNN or on YouTube or anywhere else that you get your information. But those are like interesting stories. What's going to happen? But the numbers are going to tell you what's happening now, like, and the fact. So that is like super important to monitor those numbers as you go. Now, 2 years down the road, if the company has not been able to successfully come with a plan and take action and then show some growth, well, then you have your answer. It's time to let go. Of course, it may sound like a very long time. You might as well just panic and hit the sell button right away today. But I mean, that would be your strategy. That's not mine. Sometimes I'm too patient with a stock, but most of the time it's paying off fully. Being patient with Apple and Microsoft while they were down by 25 and 30% during 2022. Very good decision on my part. So just to show you that sometimes the market goes wrong big time. You lose a lot of money on paper, but it's just part of the game. So it's the part of the investment game. So all right, Moose, that's enough for today. Tomorrow, I'm coming back with 3 banks earnings review. It's going to be a little bit later than usual. So stay tuned. And so in the meantime, do not forget to stay invested.
Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.